please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Really looking at is the impact that it will have on earnings, because at the end of the day it is earnings, liquidity and valuation which drive the various markets that we're looking at. So the impact of taxation on earnings is something that is going to be of importance to us.
Okay, so you must have picked up a lot of straws in the wind before the budget. What would you want to hear, say, on fiscal prudence, say, on corporate taxes? Well,
we want to see some, clearly prudence is something that we will favour, but we also want to see any impact where taxes can be looser, and that will benefit the earnings of the underlying companies. So that's really what we're focusing on.
Okay. Yes, well, the finance minister a couple of years ago promised that he would bring down corporate taxes but also cut down exemptions. But separately, there is a move on the part of some economists to ask for a long-term capital gains tax on shares. Will that be a big negative according to you?
Well, any extra taxes is generally a negative, and so it would not increase our enthusiasm for the market.
Right. Okay. What about fiscal deficit itself? Chances are that this year's fiscal deficit target of 3.2% is not going to be met. Economists expect it to be between 3.4 and 3.5%. What would you want to hear from the finance minister on the fisc?
Well, as I said, we are interested in prudence, but as far as the equity market is concerned, we don't need to have more tightening. We just want to make sure that the finances are being managed carefully. And we are much more interested in the growth and the impact of some of the measures that we've seen in the last couple of years moving out of the earnings momentum. So, for instance, the impact of the GST, and also the demonetisation. So they've been having a negative impact on earnings. So as we move into this year, it looks as if we might begin to see some better earnings revisions, which will catch up with the strong economic momentum that we're seeing. That, to us as equity investors, is more important than whether the fiscal deficit is 0.1 or 0.2, either side of expectations.
What are you expecting in the current season itself? The third quarter numbers for several consumer companies, for Reliance Industries, have all been above expectation. What is your earnings expectation for FY18 and, more importantly, for FY19?
Well, it looks to us as if the mid-teens to 19–20% is possible this year, which, if achieved, will support the current valuation on the market. And as I said, the earnings momentum does seem to be now better supported in India relative to the rest of the world than it has been for the last few years. So that is encouraging, and it would be good to see that catching up with the strong sort of top-line economic growth.